This is you, this is me, and that's AMC. Guys, take a look at how AMC was able to rocket up to $20.16 as its daily high after opening at $18.59. Yesterday, the AMC CEO Adam Aron emailed unique codes to AMC Investor Connect members. I own AMC NFTs. Now they're already worth $223.80. What a new world we live in. I'm not only going to talk about the options chain. I'm not only going to talk about the short interest, but I am going to talk about how we may just have saved AMC. How many of us believe that we saved it? Pay attention, watch to the end, slap that like, because that's the only thing that you need to do to have a good time and a long time with Professor Meatball and me. My name is Andrew. I'm a data scientist here in Silicon Valley. Let's take a look at the reasons to be excited, as well as what we are going to pay attention to on the far right side of the options chain. We always have $145 calls, but today a spike in $60 strike calls, 500,000 of which has just been accumulated today alone. If you guys take a look at the options chain overall, unusual activity is now congregating toward the blues, the call side, ramping us closer and closer to higher and higher strike prices. If we pay attention to the resistances that were knocked out of the park today, at 1885, we had 1918, and then 1968. However, if you guys have your EMAs tuned to 200, you would have noticed that there was a natural place for us to get rejected at $20.16. That is where the EMA was closing in down on the price action of our upwards ascending pattern. Now that we're looking at two potential rises, one to 2016 and then one back to the level of resistance we already marked out at 1960, those are the levels to watch for Friday. Hey, the next level all the way below that price action we have not reached in as far as all the way out months in the past. If you wanted to pay attention to the fact that Gary Gensler has been making his rounds, what exactly is the SEC chair going to be doing to provide retail investors what we need to be able to fight against these hedge funds? Let's pay attention. Let's take a quick listen.
But see, Gary, what I'm worried about is this. People are losing fortunes. And it wasn't like you didn't predict it, because you talk about the idea of celebrity-backed deals. But one thing, when I brought a company public through the commission, I was shaking in my boots, because I knew that they would look at every line, and they sure did. And they spent 4 weeks with me, grilling me about my projections, which they then told me no more projections, about how I was doing, what was going on. The scrutiny was so great that I almost didn't want to go through the process. Gary, these people aren't any scrutiny.
Look, it's a very different world, and I say this to anybody listening. If you invest in a special purpose acquisition company, SPAC, it's just a blank check company. You put your $10 in and you wait for 2 years to see if they're going to invest in some company that's good or not. And guess what? The promoters get 20% if they do a deal. So they've got an incentive to do something, even if it's not the best deal in the world. And the big investors often get out and redeem, and you're left in taking that sponsor promote, diluting you in that.
Well, how do we change this? This is not right. There are people who they own these things that are $4, $5, $6. They tell me, Gary, it's like, we lost everything. We didn't know we could lose everything. How did this happen?
Well, so I've asked staff to give us recommendations. We have this commission, a 5-member commission, and hopefully we come to some consensus and put out to public comment a proposal. Now, what that really means is we're trying to make sure that you get better disclosure. Number 2, that the investment banker that you, Jim, were nervous about has to do that same rigorous analysis when they do the merger, when they look at that company. But make no mistake, there's sponsors in this that want to make a lot of money. That 20% promote is usually the retail investing public gets that dilution. There's a reason that
I agree. First of all, it seems like Mr. Gensler now having to vote on whether or not same-day short disclosures are going to be a thing of the present. that is coming out next week, which of course we're going to be covering. That is not on his mind. He goes on the Jim Cramers and he talks about SPACs. Now we know that 2021 was the year of the SPACs. In fact, some of these SPACs are working out pretty well. SoFi reached all the way up to 1647 today, up 10% after a double-digit rise yesterday as well. So there is, you know, it's topical. I'm not sure if SPACs are a new form of being able to get your company public, but honestly, at the end of the day, we need to have coverage about boards, covering or the lack of it. Also, covering their tracks. We already talked about how SEC might just be done covering the crimes that Wall Street is performing. If you guys haven't seen that, that video was on the channel. If you guys haven't seen a bona fide AMC or GME playlist, you guys probably want to catch that on the down below description as well as on the channel itself. Make sure to subscribe while you're there. If you guys had already paid attention to the fact that we are looking at what short interest is reported at, right here we are paying attention to AMC's reported short interest right here on Ortex. Now again, Ortex is a web scraper looking at 99.7 million short. I'm going to refresh it real quick to get an accurate number. 99.7 mil. So you're looking at that, which is, get Ortex, can I? Which is, you guys can probably do the math, over a 500 or so float, you're looking at slightly less than 20% short. Again, that is far and away enough. That's it. What is the question? There are shorts that have yet to be covered and even more shorts that have yet to be reported. However, if we can get that into the light of day, that is what we are excited for what the SEC could do voting next week. Once again, we're covering it. Here are a couple more things that you guys should be paying attention to. OBV, on balance volume, keeps rising. Apes are just not selling. 20% short interest, we just covered that. Brokers misrepresenting SI data. Shares available to short data. IWM FTDs, $2 billion in December. Married puts are in the options chain that are unknown. That's why we cover the options chain on the daily. QA suggests that there were 4 billion naked or synthetic shares. BlackRock purchased another 9 million synthetic shares. 1,200 articles in a year by crotchety tool to tell you to sell. Adam Aaron saying that retail owns 90%, up from 80% last time he spoke, and even more. Finally, if you guys had paid attention, we were looking on the Lux algorithm as well. You guys still have that 20% off in the description. We were looking at with Bitcoin. You guys were able to see that sell signal here. Let's punch in AMC. AMC. On the 5-minute, that strong buy signal would have gotten you an AMC at the 1839s, right up to the 1930s. That is the power of being able to get one step ahead of a trade and grab yours in the description down below. Lux algorithm, take a look at ChatterQuant as well. And finally, just thank you. Thank you for reaching this part of the video. Thank you for coming along with our rocket ship. You guys, once again, are on this banana rocket ship with yours truly. So if this video was interesting or entertaining, or you just like to watch Sleepy Meatball in the corner, hit that like, slam that subscribe. See you. Money.